just look around you. Oil prices are pretty expensive. Gas is expensive across the country. And it doesn't, well, as of now, we don't know what's going to bring gas prices down unless something changes, right? At the current trajectory, with everything going on with Russia and Ukraine and with the current supply shortages of oil, if nothing else changes, oil prices will continue to go up. And the tricky part here is right now the government is also releasing 1 million barrels of oil a day into our economy and into our system because they have that strategic oil reserve. And so right now the government is trying to keep the price of oil down with this extra 1 million barrels of oil a day. Now think about that for a second. Our prices of oil are significantly high. Imagine what they would be if the government didn't do this 1 million barrels of oil a day. Or actually imagine what would happen if we did run into a real energy crisis where we can't produce as much oil. Maybe things with the war get worse and now we're facing a real energy crisis or an energy shortage. What would happen to gas prices then? Because what if that happens and we start depleting our oil reserves that the government is supposed to keep? So, this is something that you want to pay attention to because right now the government is releasing our strategic oil reserves to try to just keep oil prices down for the American people. But we're not facing the energy crisis, like an energy shortage that, potentially could happen if the war gets worse. And if that happens, again, this is like a worst case scenario. If that happens, plus, we deplete our oil reserves, then that could be a real energy problem everywhere in the world. So that's kind of what's going on the government side, the thing that you want to pay attention to, and which is why inflation is a real big concern and something that we don't know where it's going to go. You have some people saying that inflation is because of inventory issues. Other people are saying it's due to money printing. Now, it's definitely got both of them in there. The question is how much of it is money printing, how much of it is inventory issues, and we're not going to know that until it's too late. And that's how the government and the Fed work, is they're reactionary. And so you don't want to be relying on them. You want to make sure that you are staying up to date on what's happening. That way, one, you can make better decisions with your money, but so you can take care of yourself instead of just relying on the government, instead of just relying on the Fed, and instead of just relying on a random guy on YouTube to tell you what to do. My goal is to help you be educated. That way you can make smarter decisions for you, your community, and your family. So that's the first thing that I want to talk about. Now let's talk about the economy and markets. Now, by the way, if you want an easy way to stay up to date on what's happening with markets, the economy, from the stock market to the real estate market to the crypto market to inflation to what's happening in the global economy, you can check out Market Briefs. It is a free financial newsletter that I put together where my team breaks down what's happening in the top finance and business news into a fun, witty, easy to read email. It is a lot of fun. I promise you, we're going to look forward to reading this email every morning. It is such a fun read and we make it so easy for you to stay up to date on what's happening. So if you want to join Market Briefs, it's completely free. And I'll put the link for you down in the description below. So talking about markets and the economy, I'll just kind of give you an example. So, I work with a lot of entrepreneurs. I work with startups. I invest in startups. And over the last couple of years, we saw this big boom of startups with just ideas and hope. And the whole idea was, if you can have an idea and get a little bit of users, then you could raise a whole bunch of money, just because that was the game, that was the system. So you had a lot of these entrepreneurs that really weren't in the business of trying to build a product. They were just trying to increase valuations of a company. I'll give you an example. I can't disclose the company. I did not work with this company, but I had to sign a bunch of confidentiality agreements. But a company had an idea for a financial product. And they came to me and said, look, help us get to 10,000 leads, email contacts. If we can get 10,000 people signing up for our new product, then we can be valued at $2 million and we can go to a venture capitalist and raise a bunch of money at a $2 million valuation. And when I heard of that, it really didn't make much sense to me, because I was like, wait, 10,000 people? You just need 10,000 people to give you their email address and you can be valued at 2 million? Like, that doesn't make sense. Because even just on a practical level, if you just wanted to get 10,000 people to sign up for something, you just run Facebook ads or whatever. I mean, under 50 grand, you could do that. How does it make sense that, I could spend 50 grand on ads, get you 10,000 subscribers, probably even less than 50 grand, and now you could turn around and get a $2 million valuation? It just wasn't making sense, but this was kind of the environment. where people were just looking at ideas, valuations, and when you had this cheap money, this money was getting thrown around like crazy. And that had built some of these bubble businesses, which essentially relied on external money. Money from investors, venture capitalists, money from banks with cheap debt. And so there was a lot of companies out there that were relying on these types of funding sources because they just couldn't sustain a profit themselves. But now in this environment where interest rates are going up and people are being more picky and cautious with their investments because they need a bigger return to justify an investment, well, those businesses are having a much harder time raising money. And some of those businesses are going to fail. And this is where, what's going to happen, because sometimes these companies have to go under, but it's painful because that means people lose jobs. You see layoffs, you see companies go bankrupt and more people get you lose their jobs. And it's painful. However, we're in a weird economic environment where we're almost trying to desensitize ourselves from risk, where the Fed could potentially say, and the risk is, we're seeing some companies really get hurt because of our economic slowdown. So we need to cut interest rates or do more inflation to help these businesses stay in business and grow. And yeah, that can help the economy grow quickly because now, hey, these businesses that have crappy products that can't sustain themselves can get a whole new flood of cash, but you continue throwing dumb money at dumb ideas. And that is not a way to build a sustainable business or a sustainable economy. And the unfortunate reality is when you have a credit-based system, which is what we have, where our system doesn't just rely on money, it relies on how much money you can qualify for. I mean, I'm not saying it's good or bad, it just is what it is. When you have these type of systems, bubbles form. When these types of bubbles form, they have to be released sometimes, meaning sometimes bad investments have to fail, bad businesses have to fail. That way the whole system can correct and rebuild. And when you try to just eliminate all risk, that nobody can fail, well, that's a recipe for disaster, because that means, sure, in the short term, nobody fails, but eventually that means everybody fails. Because, you can create currency crises, you can really affect the economy in many other ways when you create too much inflation, and then it becomes very hard to sustain or very hard to bring down.
Thank you for watching. If you enjoyed the shorter clip from the longer videos, here's another clip that I think you'll love. And if you're interested in learning more about how to invest your money in the stock market, our team put together an amazing guide that will walk you through how to invest your money in the stock market, what the stock market is, different stock market strategies, and how to build wealth in the stock market. This guide is completely free when you sign up for our daily newsletter. So if you want to read this guide, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.